Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these videos for trading purposes. They're for information only. I always begin here with the weekly chart of the S&P 500. We're going back to just basically the start of 2020 and the COVID sell-off here on the left side. And each one of these candlesticks, as they call them, represents a week's trading in the S&P 500. Here's the bear market we had in 2022, and then we have been off to the races here for the last couple of years, really, since the end of that bear market. Surprised everybody. Everybody said, "Oh, recession coming," all that, and that's why we tend to really pay attention to just what the markets are telling us, not what we think is going to happen. So you can see here, clear uptrend that we've got going in the stock market. Had a couple of tests in, earlier in the year here, but nothing. It really just kind of coming back to our trend line. It's definitely a bull market that we're looking at here. If we come down in a little more detail to the daily chart, you can see here, and this gives us about the last couple of years trading in a little more detail. We had earlier in the year hit all-time highs here, bumped up against it, finally broke out, and this tends to happen a bit. It'll pull back to test a resistance point, and that's exactly what it did. And then we're off to the races again. Obviously, had the election the other day. The markets liked what happened, and maybe they would have liked it either way. It's just about certainty in terms of what's going to happen now. But we are in a bull market by any measure of what's happening, and mark this support right here. A little below 5,700. That is the key where I would say the character of the market has changed. Right now, we're up to all-time highs today, and moving on. We go into a little more depth here. The 2-hour chart. This gives us about the last 6 months trading. You can see we have a nice little trend going, and always in these trends you get these in a week or two where things pull back, and we did have that recently right before the election, but clearly defined uptrend. If we want to look inside the market at what's happening in our breadth measures, this is the percentage of the S&P 500 that's in an uptrend, and currently that's at 68%. So it's fine. I mean, normally in giant bull markets that are reaching all-time highs, we would want to see that at about 90%, but we're approaching 70% there. That's fine. The advanced decline line here shows us on the New York Stock Exchange, shows us how many advancers versus decliners in the market. It's been a bit flat, but certainly not negative. Nothing too troubling to see there. And finally, at the bottom here, this is the VIX, the volatility index, and this tells us what people are paying for protective puts on their portfolio. It's like insurance on the markets, and right now that's falling to 15, lowest number we've seen in a couple of months. So that's confirming what we're seeing in the markets. We come down here to the interest rate on the 10-year Treasury. We see in recent weeks it certainly had been rising. We had been down to about 3.6 on the 10-year, and now we're looking at about 4.4. So a bit of an increase we've seen in the last couple of months, but it's still overall, if we want to look at the picture, the last couple of years, interest rates haven't gone anywhere. They're hovering right around this 4% level, just sort of back and forth. So nothing too concerning there. If we come over here to the economics portion, we see the unemployment rate 4.1% there, non-farm payrolls. Definitely last reading not very good on barely holding above zero. Their GDP growth rate around 3. So these aren't strong numbers. Retail sales again positive, but they're not really strong numbers. But inflation is keeping in check, so I'd say they're okay, not great. We'll see there. As far as the forward earnings on the markets, what analysts are thinking the S&P is going to earn moving out. If we come here to Y charts and look, going out to the fourth quarter of 25, they're still calling for very good earnings on the market. So no issues there. And then finally, this has always been the concern that certainly last year almost in the markets, that we are getting to a very expensive level. You can see here, this is where the S&P is today, and this is where it would be at about 20 times earnings, and we're quite a bit above that. I mean, you're talking 50% above it. It's a very expensive market. It is. Now earnings can catch up and make that sort of go away, but it is a very expensive market. So overall, though, what we have is a full-on bull market. Not seeing really any concerns other than the fact that it's very expensive, and not sure that that's going to do anything. That doesn't really work as a timing indicator. It's just okay. Stay in the market. Stay invested. That's what they're telling you to do at the moment. But be aware that yes, it is expensive, and at some point that can end. But I would caution, reminder of the .com days when everybody said the Nasdaq and everything was so expensive, and it took years before it finally caught up. So hopefully that's helpful and informative. I'm going to put up our information here. If you'd like to hear if you have questions for future videos, or if you'd like to hear about what we're doing in our portfolios for our clients, please don't hesitate to reach out. Until then, again, hopefully it was informative, and we'll see you at the next update. Thanks so much.